Run us through the sense you're making of the kind of activity we're seeing as we wrap 2010 up.
Good morning, Alishia. When you look at it's always like this when it comes to the December month, the Nigerian Stock Exchange. There's a little bit buyers apathy. People are not really buying because most people are thinking of the ceremonial places. Actually, people are actually selling this period and even buying this period. And then the private, the only people that actually help the market to move the market forward these days are the portfolio manager that are trying to balance their portfolio for the year and then trying to see what to take position in, mostly for those that their year end is December. So when you look at that, you will not be surprised in what is happening in the market at the moment because it's actually a festive period in the market this time.
Well, we've still got lots of speculation, keeping the rumor mills going. And within that space, I want to take a look at the banking sector specifically, where the speculation is around M&A activity. To what extent are you getting involved in counters that are speculated to be involved in some kind of merger and acquisition activity, the possible consolidation of the industry? Because from perspective on this end, as I was saying, it seems to be very speculative right now.
Yes, Alishia, it's still speculative as long as the CBN is not coming out categorically to tell us whoever is buying this rescue bank or whoever is buying or merging of these banks. For me, it still remains a speculative thing because the CBN have actually kept whoever is buying these banks close to their chest from up to this moment. But like we say, we won't wait too long. Before the end of this year, but at least by December 31st, we should actually know who is going to get some of these banks. So going forward, we've been hearing a lot of speculations, but we're not really surprised about the speculation that are coming in, knowing fully well that some of these banks have actually recovered from some of their marginal losses and huge losses, and some of them are trading at a discount at this moment. So you won't be surprised what is coming up from the market as regards these banks.
There is some news flow emerging on that front. We had a consortium of private equity investors having emerged as the preferred bidder of AfriBank, specifically that with local rival Fidelity Bank, the reserve bidder. What are you making of that story?
Alishia, is a mixed story. For shareholders of Fidelity Bank, that might not be a good story for them. For the private equity firm, that might just be a very good story for them. Because for the shareholders of Fidelity Bank at the moment, they are not really happy with the way the bank is doing. In terms of the outstanding number of the shares of the bank is actually the largest and in the Nigerian Stock Exchange banking sector. And then when you look at them coming up to merge with a bank like AfriBank that also has a large outstanding numbers of shares, that means it's going to take a longer time for the bank to really come out to the type of profitability that people expect them to be. And then when you're looking at the synergy, you realize that it will be a good synergy because AfriBank has a large coverage when it comes to branch network expansion compared to a Fidelity Bank, which their branch network is actually limited to the southeastern part of Nigeria. And so when you look at that synergy, you could say it's a good thing. But when you look at the mergers of bank, then you begin to look at the policy that's going to be involved in it, the type of tying into the rebranding of this bank, and you realize that it's going to take a lot of money out of Fidelity Bank. And what are they looking for that they are buying Access Bank? That's on that thing. The management of Fidelity Bank has to convince their shareholders because their shareholder is actually telling them, get into the niche of the business that you want to do, expand a little bit to other parts of the country. And we had some rumors long ago that this Fidelity Bank is actually a bank that was looking forward to buy the regional license. So now that you see Fidelity Bank is not trying to buy an AfriBank, that means they are not changing their mind. They are trying to use AfriBank as a springboard towards launching themselves to become a national bank.
Let's take a look at a company that is pursuing regional expansion pretty aggressively, Dangote Cement. It's made an announcement, as I was saying earlier, to invest $400 million in a new cement plant in Zambia. This further entrenching its footprint as a dominant player within the cement space, where there is a strong focus on building Africa specifically. Are you a buyer in Dangote right now?
Very challenging question. I'm not really a buyer in Dangote Cement at the moment. But when you look at the vision and what the company is trying to do, you realize that in the long term, it's actually a good company to really take position because it's really expanding towards Africa especially. And from there, I know that they want to eat some part of the world too. But when you look at the price of Dangote Cement at the moment, it's a little bit on the high side for most investors. And so most of this Dangote Cement is being held by institutional investors. So when going forward, it's a good stock to buy. And, if you look at their dividend payout for a stock that is selling at 122 naira and giving a dividend payout of just 2 naira, interim dividend of 2 naira, maybe final dividend of around that 2 or 3 naira, you realize that it's so on the high side. So investors, low-earning investors are not really looking at Dangote Cement at the moment, but the institutional investors are actually taking position in Dangote Cement, and this will help actually boost the shareholding, the bottom line of the share, and will help boost the fundamental of the share when you have institutional investors taking position in stock like that.
There was speculation that Lafarge WAPCO and Assar Cement, both subsidiaries of Lafarge, will merge their operations. What's the update on that front following the merger of Benue Cement Company with Dangote Cement, and how critical is this move for Lafarge to remain relevant in the market where Dangote currently owns plus minus a 60% market share?
Lafarge will really have to work very hard to be able to compete with the Dangote Cement. Because when you look at the plant that Dangote Cement has, mostly in terms of the plant network that they have in Nigeria, in faraway Kogi State, it's one of the biggest plant network in Africa. And when you look at Dangote distribution, channels of distribution is all over the country in Nigeria, and they're trying expanding towards Africa. But when you look at Lafarge WAPCO, they try to service only those their customers in the southwest, not really expanding their market value to other part of the world, other part of Nigeria, compared to Dangote that have a large network. You remember, Benue Cement is located in the middle belt part of Nigeria. You have the Abajina Cement Company, Dangote Cement, also located in Kogi State, very close to the northern part of the country. Then you see he has gotten a lot of expansion. And this is helping him in terms of his distribution network. Because when you look at the location of Dangote Cement, which is in Kogi State, in Abajina, very close to Lokoja, they're looking at the type of infrastructure work that is going on in Abuja, the capital city of Nigeria. You realize that Abajina is closer for customers to get their cement and do this expansion work than coming to far east like Ogun State to get Lafarge WAPCO. So Lafarge WAPCO have to do a lot when it comes to expansion. And though they have their own private plant, generating plant, which they say that's actually eating up into their profit. But when you're going forward, you realize that it will take a lot for Lafarge WAPCO to really compete with Dangote, even if they merge with Assar Cement. It will actually be very difficult.
Especially in a context where work is not coming online probably as fast as had initially been anticipated, with the government's Eurobond now being put on hold. We know that the Eurobond roadshow was supposed to have kicked off through this week. What have you made of developments there?
Well, this has to do with government. It might just be the government strategy for that. They may think about the timing. But if you remember, just last week, one of the companies all over in Europe said that the Eurobond will be oversubscribed, and then coming out with a suspension from the government side. It might just be that they are trying to tie up the administrative angle to it. It might not have to do with anything that has to do with the fundamentals. And, these such things also have to go to the National Assembly for approval. I'm sure they are still working on that. You don't just go into such a thing without letting the National Assembly know what you are going to do, what you are going to use the Eurobond for, and what. And you should not forget that even the National Assembly at the moment is saying the government's level of borrowing is becoming high. I think those are most of the gray area. Maybe they want to sort it out before they actually come out with the exact time.